Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news of a sharp dive in wholesale benchmark interest rates. And American benchmark mortgage interest rates have fallen below 7% for the first time since August. But first, American jobless claims fell last week and by more than expected, and back to the low end of the range over the past year. As early indicators had suggested, the US holiday season retail impulse was good. Now the official retail sales data for November is out, and that confirms the earlier data. Value levels are up 4.1% from a year ago, so there's likely been an expanding retail volume too. And you can see the impact of that demand on business inventories, which fell, a small slip from October true, but one that wasn't expected. In Canada, their housing market sales are retreating, even if the shrinkage is still small. And Taiwan's central bank kept its policy rate at 1.875%. Overnight, the ECB was clear that it will keep its rates at multi-year highs for a long time yet in its battle to get on top of inflation. In contrast to the US Fed signals yesterday that softenings are coming in 2024, the ECB was staunch. However, Norway's central bank raised its policy rate by 25 basis points to 4.5%. But the Swiss National Bank held its rates unchanged, as did the Bank of England, which also conveyed a tough line against price pressures. The ECB and English pushbacks had the effect of bolstering their currencies. And Australian inflation expectations fell from 4.9% in November to 4.5% in December. That's according to the latest update from the Melbourne Institute survey. And at these levels, the RBA will also likely remain staunch in its monetary policy positions, even if it is at its lowest level since early 2022. Although the Aussie jobless rate rose to 3.9% in November, the number of new jobs there rose more than expected, and most of them were full-time positions. Global container shipping freight rates rose another 4% last week as the world adjusts to the two big canal pressures, mainly on routes out of China. Meanwhile, bulk cargo rates remain high and are coming off their early December peak. The US Treasury 10-year yield has fallen sharply today in the wake of the Fed meeting, now at 3.93% and down 23 basis points from yesterday. And the last time at this level was in July. And the price of gold will start today at just on $2,037 an ounce. That's up a very sharp $55 from this time yesterday. And oil prices are up $3 from yesterday at just on $72.50 a barrel in the US, while the international Brent price is now just on $77 a barrel. And the Kiwi dollar starts today at 62.2 US cents. Against the Aussie, we're a quarter cent lower at 92.7 Australian cents. Against the euro, we're down 10 basis points to 56.6 euro cents. With the falls against the yen and the pound, that all means our trade weight index starts today at just on 70.3, just 10 basis points firmer than yesterday at this time. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston.